introduce and welcome Breanne Powers. You were fortunate. You got appointed to the best committee.
For sure. Thank you.
We're glad you're here. Please feel free to jump in anywhere, anytime. It's a good committee, and we look forward to working together.
Thank you.
So I'd like to call to order the Kentucky Community and Technical College System, and like to ask Ms. George, parliamentarian, to please call the roll.
Chair Cox.
Here.
Vice Chair Hamilton.
Here.
Regent Martin.
Here.
Regent McGraw. Regent Powers.
Here.
Regent Schaus. Regent Schaus. Here, sorry. Thank you. Regent Stevens.
Here.
And Regent Sutherland.
Here.
We have a quorum.
Thank you very much. So we need to approve the meeting minutes from our last meeting, which was on August 29th, which seems like eons ago, August 29th, 2024. Are there any corrections to the meeting minutes? If
Actually,
not, may I have a motion to approve?
Can you spell my name right?
Yep.
Thank you. Appreciate it.
We will make that edit.
We'll try to audit that next time, Marty, and make sure that it's right. With that correction, is there a motion to approve?
So moved.
Thank you. A second?
Second.
Thank you all. Parliamentarian George, conduct the vote with a show of hands, please. All in favor? I see a lot of hands. Any opposed? Very good.
Marty.
Hey, and Russ,
Okay.
Chairman, it's Chelsea. She's back. Parliamentarian Chelsea Young.
Oh, my goodness. Welcome.
Welcome
Sorry
back,
about that. Sorry about that, Chair. We had a change. I wasn't sure when Chelsea would be back.
Well, welcome back, Chelsea. I can't hear you, so I'm hoping.
I was on mute the whole time. See, that's
Okay.
that's what happens when you come back. Thank you very much.
See, you said Parliamentarian George, and she didn't miss a beat. She just said,
No. I'll tell you what, it's a good group. There's no doubt about it. So I'd like to ask Dean Dorton to provide an internal audit update. And we have Todd Kilburn, and Dean Dorton will also provide an update of the internal audit.
Hey, thank you. Yep. We've got our folks online. Lance is on the line. So Lance, I'll just turn it over to you.
Thank you, Todd. Thank you, Russ. I'm going to attempt to share my screen, and fingers crossed this works out. Can you all see that?
Yes.
Success. All right. Well, for those who don't know me on the call, my name is Lance Mann. I am an audit director and serve as the director for the KCTCS internal audit. We are grateful for the opportunity to serve KCTCS and all of its colleges. I've got a short report for you today, which will be good for the Thanksgiving holiday. Nothing too stressful to go through today. During this quarter, we had a little bit of a lighter lift. There's a number of audits that are in process, just not quite over the finish line yet, that you'll see in the next, and I'll kind of go through some of those. But during this quarter, we did finalize an audit of Big Sandy, an audit of Southeast Kentucky Community College, and some IT key controls testing. High-level summary of the report. As you can see here, we had no findings or issues at Southeast or in the IT work that we performed. Those were very clean audits, and the team should be commended. And for Big Sandy, we have one low-risk issue that was very, very small, but I'll go through that with you here in a moment. For Big Sandy, yeah, so for those who've not been in this meeting before, I'll just briefly, we attempt to, over a period of typically 2 to 3 years, visit every college KCTCS has and perform a series of controls that are held at the individual colleges. It's a lot of things over cash receipts, tracking assets, procurement card usage and the documentation associated with that, some personnel records related to payroll and I-9s, and just an overall understanding of the internal control structure and the business office at the individual colleges. Big Sandy Community Technical College does have good internal controls in place. Good news, the Pro Card activity selections made were all well documented and supported. For those who don't know, KCTCS also has what I'll call an automated control over Pro Cards. It's a third party that monitors your Pro Card usage and makes sure that the transactions are in line, and it sort of flags any transaction that could not be out of line for somebody to go and investigate further just to check. And so you've got multiple controls over Pro Card usage at KCTCS. Our one low risk finding was around personnel records. During our testing, we found there was one employee's I-9 that wasn't completed properly. It was section 2 was not completed. And so we just recommend one, training on how to properly make sure I-9s are completed properly, and 2, we recommended going and getting an updated I-9 here, and so management has decided to pursue getting an updated I-9 for that individual. Any questions before I go to the next section? Southeast Kentucky, we had no findings, same very similar procedures and audit steps that we performed at Southeast. In the IT controls testing, we actually worked with your IT director at KCTCS to put together what I'll call a very comprehensive multi-year IT audit plan. And it's set up to follow some very structured federal guidelines around IT controls. For those who are IT people, it's I think it's called NIST, which is a very structured set of policies, procedures, and controls that institutions should have in place. KCTCS also has to comply with an elevated set of federal guidelines related to the Gramm-Leach-Bliley Act. Those are incorporated in the IT work that we do to make sure that KCTCS is following rules. This particular quarter, we did some IT operations on campuses for Bluegrass Community and Technical College and Southeast Kentucky Community and Technical College in the areas of backup, network management, user access, and user awareness training. You can see here some of the variety of steps and strengths that we identified. We did not have any findings. However, we did identify during this process some things that will be added to our risk assessment and audit plans in the future. Those items are listed here at the bottom of page 8. A couple of them, there was a large server deployment at BCTC that we probably want to look at in the future after they've got some time to work out all the various setup and whatnot there. BCTC is making use of some custom-made scripts that were developed by IT for automation purposes. We're going to incorporate that into our future risk assessment. And for both BCTC and Southeast Kentucky, there's some local backup procedures for local data that we're going to look at testing in the future. At Southeast Kentucky, staffing and retention of IT talent has been an issue, so we're going to continue to monitor that. And Southeast Kentucky uses a different help desk system than the system office does, and so that's not a problem. It's just one that we're going to test in the future and incorporate into our risk assessment. In terms of follow-up, for those who haven't been here before, when we have a finding or an issue, we also go back later and make sure that management is doing what they committed to doing in their response. And so during this quarter, we entered the quarter with 19 action plans from prior audits. None of those 19 were due during this quarter. Some have been extended to later dates. They're taking just a little while longer to implement. You might have to be buying a software. You might need to coordinate a training. Some of those things just take a little while longer to do. I'm not going to read all of the findings for you, but you all should have a copy of this report, and each of the items that we're continuing to follow up on are listed in the just past this page. There was one finding that was due this quarter and completed this quarter up here at the top, related to onboarding procedures to ensure appropriate documentation and training when pre-employment agreements exist. And one I mentioned at the beginning, we had a few things that we're finalizing that are in process. The student financial aid audit is substantially complete. We weren't able to go through the potential findings that we have with all of the interested parties prior to this meeting. And so those conversations are going to be had right after Thanksgiving, and we'll report on that during the next quarter. We're also in the process of doing a document retention review. That particular audit was added after the risk assessment and initial audit plan was approved. There was a risk that was determined is document retention appropriate, and is the policies being followed. And so we actually replaced one of the individual college audits that we had originally planned with this document retention review. And we worked with management on making sure that that happened. And that's part of internal audit, is you're supposed to do a continuous risk assessment and adjust the audit plan accordingly as risks present themselves. But during our next quarter, the next time I see you, you should be reported on a student financial aid audit over return of Title IV funds, document retention review, West Kentucky Community and Technical College, Henderson Community and Technical College, the month-end close and account reconciliation process, cash collection processes, and my guess is we're going to get one more individual college business office audit completed before the next time I come before this committee. In the IT space, we're in the process of doing some work over the identification and authentication areas, the awareness and training of third-party service providers, along with 5 other audits that we're going to complete and present on before the next audit committee meeting over media protection, risk assessment, security assessment, system and information integrity, and IT operations related to campuses and their level of autonomy, which is similar to what we completed this quarter, just for other campuses. Does anybody have any questions or comments for me?
Lance, I don't have one for you. President Qualls, and this is just a little more curiosity than anything else. One of the things that was cited in there was that we have different help desk vendors, I think.
Yeah, actually, I just took note of that. So I'm still learning, and this is a larger conversation about consistency and uniformity across the system. So I actually took note of that when it came up.
Perfect. Lance, I didn't see anything in this report from an audit committee perspective that should have piqued our interest. I think there was some, I know nothing is a nit, but I think there were things there that we can learn from. But anything in there that you think as a committee we should be focused on?
Not in this particular report, Russ.
Any questions from the members of the committee? Okay. Thanks, Lance.
Thank you.
So we need to move on to the state examination part of this. And to that end, I'd like to ask Todd Kilburn, our CFO, to provide us an update on that.
Thank you, Chair Cox. As we have gone through this, I'm going to be giving a little preview of some of what we have in the forensic audit coming back to us. But there were one outstanding piece for the state examination report was around our Fund 10,001 account and how we were managing that. And so as we came back to that, that was the piece that needed to be completed in order to fulfill our responsibility around the state examination audit. So what I will tell you is that they noted was they went back to 2003 through 2023 and looked at this account. And I'll let them speak to it a little bit more, but in essence, they found that the accounts balanced over the full 20 years. So everything was fine. There was nothing moved or inappropriate, but they had two recommendations that we'll talk about because it indicates how we need to respond to the state auditor. So the first one was that there were 656 accounts in this 10,001 account. It's our pass-through account. And they felt that that was too many accounts and it was difficult for us to manage, given the transactions that go in and out. This is the account where student payments come in through this account and are distributed to the colleges. It's where our state appropriation comes in and then is passed on. There's all kinds of different accounts, but they determined that there were a lot of accounts where there were just small amounts, maybe an account used once or twice over that 10 years, that really should come out of that so we can better manage that account. And then the second recommendation they had was to perform a periodic review of those accounts that have activity there to determine which ones should no longer be in that particular account, that pass-through account, again, so we can better manage it. So by means of update, we have sent a letter to the Auditor of Public Accounts indicating that we recognize and take these recommendations seriously, that we are working on them, and indicating 3 steps we intend to take. One is we're going to form a cross-departmental group to regularly review this account and do a couple of things. The first is to evaluate those 656 accounts, determine which ones should be moved and where they should be moved, and what processes we could use for greater clarity around that. So we want to clean up those 656 accounts to try to address that. The second part that this group is going to be doing is performing a quarterly review. They had suggested perhaps an annual review, but I think given the size of this, at least initially, we ought to do it on a quarterly basis to ensure that the account is regularly balanced, procedures for balancing are established and codified, and new accounts are added within account 10,001 only on the recommendation of the working group. So if somebody says, hey, I need to pass through some money here, only the working group will allow someone to have access to it, so we don't expand the number of accounts again in the future. But we want to keep this tight, and we want this working group to establish parameters and be able to make sure that no other accounts are added. And then thirdly, to provide me with a quarterly report regarding how it's being balanced, its fund balance, any changes or accounts that are made. And so this would be a group that would be looking at this both from the accounting side and from the accounts receivable side, as well as the expenditure side, just to make sure that everybody's in the loop and everybody knows what's going on and we report back appropriately. So while I know this is getting a little bit ahead of the forensic audit discussion, we did want to let you know that in relationship to the Auditor of Public Accounts state examination, this is what we propose to them as our action plan forward, and which we believe completes and fulfills the expectation of that first finding in the state examiner's report.
So it wasn't necessarily a discontinuation of the 1001 account, but tighter controls, is that right?
Correct, tighter controls and more of being a little more restrictive on the number of accounts because it was just so expansive. It was hard to track all the ins and outs of the account.
Mr. Chair, if you don't mind, just take a brief moment. We got to celebrate our small victories. We just completed the state examination, and so I'm really thankful for everybody that was involved in this. We have cured that. We're moving forward. And then also of note, all the other large institutions have these carryover accounts, so we may want to check with our peer institutions in the state to see how they manage. And some of their carryovers are quite larger than ours as well. Then lastly, we need to have a discussion sometime in the spring about our budget reserve policy across the system and how that relates to the carryover fund as well.
Couldn't agree more. Couldn't agree more.
How large is this group that you're going to have? You said you're gonna have a team that's gonna look at this? How big is this team?
I'm looking at probably 6 to 8 people. I haven't specifically named it. I want it to be small enough to be nimble and act without trying to get a whole lot of people together, but large enough so that we've got a comprehensive group of people at the table with all the different perspectives to be able to give feedback.
Okay, Todd, anything else on state examination? I don't think this requires any action on our part at this juncture. It was informational. Is that correct?
That's correct. Yes.
Mr. Chairman, I have a question for Todd or Buddy. The comment overcharge to the colleges has been floated around for the last 18 months. So I'd like to see maybe a brief sheet sometime if those, how much those were, and if some of those have been redistributed back to the colleges. Thank you.
Thank you, Regent Stevens. And just a reminder, back in January, we did send back the 24 million that had been identified in the state examination back to the colleges.
Thank you, sir.
So as of right now, there's nothing else due back to the colleges that's been covered.
Correct.
That is correct. I think we do want to take a look at our policies around this and see how we're working with those institutions. I think there's some lack of clarity on everybody's part around that. And so we'll be working at trying to make sure we establish how that gets done so it's in a fully transparent process. And we know everybody's clear on how we're managing this.
Okay. I knew at that point when we found there was a problem that we changed our redistribution methods to be more up to date, because it was more of a retro instead of an ongoing. So, but that's continuing, right?
Continuing, yes.
Okay.
All right, Todd. So let's.
We have another. I think we had another hand up somewhere.
Oh, I'm sorry. Oh, I'm sorry, Regent Powers.
So I just wanted to know, for the work group, are you planning to include representatives from a couple colleges on that, or would that be system-based?
It would include representatives from colleges, a couple of representatives there as well. So people at the colleges are aware of what's going on and can give their input and feedback. Again, we want to be transparent and clear about what we're doing and get all the best input we can.
Thank you.
Regent Stevens, your hand's still up. Did we have another question or did we get yours answered?
Thank you, sir. No, I got mine answered.
Great.
All right. Forensic.
Let's move into the forensic audit. And obviously, Todd, we're going to keep you there. And I think KPMG is going to help out with this discussion as well. This is one that we will be taking an action on to accept this audit report at the conclusion. So I'll keep it with you, Todd, and KPMG.
Thank you. And we've been working with Michael Doyle at KPMG as some of these reports have come in. We've talked with them, worked through some of the details, and he can speak to the details of this consolidated report, and he's on the line now. So Michael, I'll turn it over to you.
So I'm going to step in real quick just before Michael kicks off. On behalf of KPMG, I did want to thank the Kentucky Community Technical Colleges System, everybody on this call, and all the folks that we worked with very much for their trust in KPMG to perform this important endeavor, but also all the cooperation. I want to make sure that this group understands that the folks that we worked with across the board were extraordinarily cooperative and helpful in getting us the information to the extent that it was available, getting us the information that we needed, and always made themselves available at a moment's notice. So a great team. It's been great working with everybody. We're looking forward to sharing our observations with you, but I did want to give just a quick update on the team that we worked with. So thank you very much. Mike, can I kick it over to you now?
Thank you, Dan. Thank you, everybody. My name is Mike Doyle. I've been the lead of this investigation. I'm a CPA, CFE, CFF, consider myself a true forensic accountant. And we've been engaged to conduct a forensic audit based on the state examination. We submitted our final report as of October 31st, 2024. To describe the report, it is a 120-page report. We're not going to go through that here today, obviously. But we've broken it up into 4 real parts, just the overall background, what the scope of our review is. And then there is 10 distinct objectives that we were to accomplish through our review. So instead of providing 10 individual reports, we created 10 individual reports, worked through that with the relevant caseload team, and then incorporated that into our report, and then only included a 1-page summary of each of the objectives, just so there's a snapshot so you can get an overview of the project. And then there's a full report at the end of our full report. So KPMG was engaged based on the state examination to conduct a forensic audit to verify the integrity and accuracy of the financial transactions to ensure the adherence to GAAP, to assess the effectiveness of internal controls, the risk management policies and practices, and compliances to policies and procedures. To identify and investigate any instances of fraud, theft, waste, abuse, or collusion within the system, and to provide guidance and recommendations based on our findings. As I said, we were tasked with 10 individual objectives, so we actually broke them out separately and addressed them each individually since they were not directly related to each other. As Todd addressed the 10,001 account, before we actually get into the findings that Todd addressed, I would like to discuss the one finding from the state examiner's report about the $421 million journal entry that it conducted in 2003. Now, we were able to trace this $421 million journal entry back to the 2003 financials. It is part of a closing transaction that has occurred every year since 2003. The purpose of the transaction itself is to allocate the fund gains and losses appropriately throughout the different funds as they're doing the closing entry. Due to the state retention policy, the documentation related to this journal entry is not available and should not be available, as the colleges have followed the state retention policy, and the information that would be the support, unfortunately, for our review, since it is 20 years later, is not available. We do want to state that that retention policy has come across as part of our review, and the retention policy that's in place, depending on the transaction itself, does maintain information from 4 to 7 years. And we have come across that the state, that the college has been following that policy consistently based on the review that we've conducted. To get back to our report, as we discussed with the 10,001 account, we did a reconciliation from fiscal year 2003 through fiscal year 2023 to identify the inflows and outflows of the transactions to this account. Based on that, we were able to reconcile all years back to the trial balance. The finding that we had was the number of transactions passing through, as this was to be an account that should basically reconcile almost on a daily basis, right? It's a pass-through account. It's never going to exactly reconcile, but the expectation for this account is nothing should truly be sitting there for a long time. Based on the number of transactions and the accounts that were being connected to this 10,001 account, it could see how the difficulty was to maintain a consistent balance for this account. As we discussed, the recommendations would be to review the accounts that are connected to it based on the final report that we provided. And then also, as we discussed, to create that committee to review what activities should and should not be going through this account. Second, with affiliated foundations, KPMG was engaged to examine the disbursements made to these foundations and to assess the autonomy of these foundations to ensure their adherence to independence requirements. The foundations generally have the processes in place to ensure appropriate fund spending. However, the process was not formal or consistent across the universities. So what we recommended was to have more of a consistent process across all of the individuals within the system. I apologize for going quickly. I know we're under very strict time periods here. Executive compensation. We reviewed 40 executive compensation packages from July 1st, 2019 through 2024. The purpose of this was to ensure adherence to a compliance with the executive compensation policies and procedures. Basically, all 40 of the executive compensation that we reviewed did follow the policy in essence. However, when you look into the details, some of them did not follow the systems that were related to the process that was in place, such as some of the compensations did not align with the contract terms. They did not align improperly with the payment ranges and the timeliness of the signing of the contracts. For FERPA, KPMG identified instances where noncompliance within the last 5 years to evaluate the policies and procedures and training programs related to FERPA. We found that for the 10 colleges, we had no noncompliance within the 5 years. We found that 6 had some instances of compliance. However, all of them, at the end of the day, did eventually comply with federal regulations. For the financials, KPMG used our KDAT tool, which is a data analytics tool that reviews the manual journal entries 100% passed through the general ledger. We performed this analysis on all years from 2020 through 2023. Based on that analysis, we were able to identify transactions that were outliers or hit on red flags. We then selected a population to review those transactions. Any transactions that were selected between 2000 and 2020, the support was not available, as it should not have been available in compliance with the document retention policy related to the transactions that we requested. We determined that the information that was missing from the local colleges, from our understanding, was that information should have been uploaded from the local college and not from the system itself. And the recommendation there is to ensure that the local colleges are receiving training to ensure consistency of what information should be entered. Higher education. So here what we looked at is we did a comprehensive assessment of the procurement procedures, particularly focused on professional service contracts. And we looked at the system itself and its 16 colleges. What we found is, based on the assessment, that we found that they were effectively designed with procurement appearing to align with the procurement regulations that they needed to be aligned with. KPMG determined that KTCS's procurement process could be strengthened based on adopting a more rigorous document process for signature approvals, including those use print names, titles, dates, etc. Marketing and PR. For marketing and PR, what we did here was we analyzed the procurement transactions that were passing through marketing and PR to determine how their activity was being spent. We noted that in general, they were following the process and the policies in place. What we did find, however, was that 86% of the transactions were being approved after the fact. Personal and unit investigations. So based on previous investigations that were conducted by outside counsel, KPMG reviewed the recommendations that came from those investigations. We created 15 distinct themes from those investigative reports. From those 15, we found that 9 of them have been fully implemented. 5 of them are in the process of being implemented, and 1 of them has not started to be implemented at this time. Through that process, there was discussions on ensuring that the ones that are not implemented, that they're starting to work on to complete those. Pro cards or P cards, KPMG conducted a review on the P cards across the system from July 1st, 2018 to July 2004. What we used is two-step analysis here. We created a dashboard in Power BI for both for KTCS and for KPMG to review, to see the transactions based on the users for analysis. Based on the dashboards and the analysis conducted from there, we selected a sample of transactions to review. From those transactions, again, there was about 50% of them were from prior to 2020, so they were not available due to the retention policy. Again, the big finding here, again, is that the approvals were provided after the fact instead of prior to being using the card. And voluntary separation agreements. KPMG was requested to assess the consistency and legal compliance and mitigate any potential fiscal or legal risk related to voluntary separation agreements. Basically, what we found with the voluntary is the inconsistency of how they were being maintained and how they were being followed through and determined how the agreement came about. Some of the agreements were not routed through HR, legal, or payroll. Some of them did not agree with the payout amount, did not agree with the agreement itself. So at this point, I'm going to take a stop and open it up for any questions. As I said, our final report does have the full detailed reports of all the scope, activities, and findings and recommendations on each of these objectives. We just wanted to give you a very high level of each of our findings at this time.
Thanks. It's a lot of information. What questions do committee members and others have? I think one that jumped out at me was around executive comp. Could you talk a little bit more about that?
Sure, Max, can you?
Yeah, so for executive comp, we reviewed the compensation of those 40 executives throughout that period. And as Mike mentioned, sorry, forgot to turn on my camera. We saw that they were in line with policy, just that sometimes it did not align with contract terms, meaning I think one person, it was just for one sample that we reviewed where it didn't match the contract so much to speak, but we didn't find anything that was outside of policy. So with that, our recommendation is that that the ERP system accurately enforces those pay bands and salary limits, as well as updating the policy to reflect the market scales and pay bands.
Yeah, so there wasn't anything necessarily out of bounds there. It was just that the terms of the contract were not consistent.
Yeah, it was just for one individual.
Okay. Okay. Rayanne.
Was the improper payment ranges the same for that one individual that you're as well?
It wasn't that they were outside of their pay scale or pay band. It was just, I believe, Mike, can you go down to page 42 so we can look at that particular sample? Yep. So if you scroll down to where we have our findings, I believe, yeah, here, that one page up. So here, compensation paid to the executive contract was below. So here, the contract was for $86,000. However, the compensation was for 93 for both years. So we were just saying that based off of their contract, they were contracted for 86, but according to their pay band, it would have been around 93,000.
Also have a question in regards to the and so in the slide, I believe it mentions something about the being approved after the fact. Was that just because they were processing them electronically?
Apologies, I can't really hear you.
I think the question is related to approving the
Sorry.
card payments after the fact.
Oh, for marketing and PR. Yeah, we found that the almost majority of the transactions, the transactions were approved afterwards. Through the workflow process, we saw those approvals happened after the transaction receipt occurred.
I'm sorry, I was referring to the 62.5%, I believe is what it mentioned on, I guess, the P card slide.
Right, and it's along the same process. The same understanding is that it's after the transactions occurred, and then the approvals being provided after the spend has already occurred.
Okay, thank you.
Any other questions?
I'll give you an example of that. Like Dr. Quarles's travel. I mean, it's approved after. I mean, the general concept is approved for him to be able to go in the budget, but the actual expenses are approved after he submits them. Is that what you're talking about?
In some cases, yes, and that would be expected in some cases. But then when you have it's for a marketing department, right? So when there's approval for an event, right, that spend should be approved before the spend itself.
Okay.
And another question in reference to separation, before the final decision is made, should the board approve that decision if it's a contract and the president has decided that he no longer needs a service before that contract is finalized? Should it be approved by the board?
I don't think we can approve those kind of things. Those are so fluid. They need to be left up to the president, unless it's of some kind of major concern or some kind of conflict.
I would say, just to add to that, is that as long as it's within the normal parameters of the voluntary separation agreement, I don't think that it needs to go to the board. I do think if for some reason there's a particular agreement that's going to fall outside of the normal parameters and it's going to be more of an exception than the rule, then there might want to have some additional oversight. But in terms of the normal operations, I don't believe that that's something that would need to be approved by the board.
And I would agree with that, because we have to have the ability to move quickly and timely in the event that one of these needs to be executed.
Yeah, I think there's always just we rely on leadership's judgment to make us aware appropriately, but I think it's well lined out.
Looks good.
Chair Cox, I just want to mention from our perspective, as we've taken a look at this, there's a lot we have yet to dig into, but I think that we're looking at 4 basic steps to try to resolve the majority of these things. The first is, which we've already been doing, is updating and assuring our policies are correct and in place and that they're the right policies. Secondly, making sure that our procedures and the processes align with those and making sure that we are clear on the process, even for new people when they come in, so people know how to do this right from the start. The third is then making sure we provide the right training to people and building in more training and consistent training, particularly for new people, but reminders and refreshers for others. And then fourthly is making sure we have the right tests and accountability around that. We've spoken with Dean Dorton. I've spoken with Dean Dorton already about talking to us about maybe some of the things they could do around that to give us some guidance and some support in doing that. But I think I'm not on all of these, but on most of these, if we have the right policies, the right procedures, the right training, and the right accountability, we're addressing the vast majority of these recommendations. And so that's what we're focused on at the moment.
Yeah, I think that's well said. And I do think that those are the important things. I don't want to add work to it, but I think as we evolve, one of the things that is important, will be even more important as we go forward, is clarity. Everyone's understanding of what this is and how we do it, and the review and accountability of that. But understanding it's one thing. And to that end, maybe one thing we could do in the interim period is some sort of report, or I guess it's called an authority matrix. What are certain levels of the organization allowed to approve, and under what circumstances, if in fact it could be easily scripted, I guess. But clarity of what people can do and where they need to go to get the next level of approval, if they do, is kind of an important part of this to me. I think people want to be compliant. It's just sometimes they don't understand what that means. So not an action step here, just a suggestion to think about as we look forward, with this report being a tool to really help us evolve.
Yes.
Yep. And Russ, this is Lance. Sorry to interrupt, but the only thing that KPMG did a very nice job, so I want to commend them on that. I also want to commend KCTCS on, the findings that KPMG found weren't terrible. They were actually 20 years of transactions they looked at. I would consider this a win for KCTCS in many ways, and I do think KCTCS should be commended for that. But the main thing I wanted to point out here on the pro cards, I would add one more bullet point, if it was, if I could, that would say consider some form of policy around what transactions are pro card appropriate and what transactions are not pro card appropriate. So like marketing contracts and event contracts, in my mind, should be run through AP as opposed through pro cards, which would allow for that approval before the fact. Things like that.
Yeah. I think that gets at some of what I was saying, Lance. You just said it better. I think people want to do and follow it if they know what's the expectation. And I think that's a good example of it.
Great.
Well, and just coming from a college perspective with the transactions not being approved before the purchases were made, I do believe that most of these were probably approved, but then when they ran their EBA-8s and stuff through the system, that was the official approval. So I think there's just a little bit of a process, consideration that we need to look at there.
A final question that I would have about this, I guess, in President Quarles and anyone else, to what level are you going to, or are we going to want to share this report with the full board in December? What are your thoughts on that?
We have it on the schedule. It's on the agenda already. I think it's on day two. So we've already mailed out a physical copy to the regents as well, so they can go through it, whatever detail they want. But we do have a presentation by Todd Kilburn ready to go.
And KPMG is prepared to be there as well to speak to this from their perspective.
Well, Chair Martin, I defer to you on this. I do think it's an important enough topic to not assume that people have read or try to in any way condense this. I think it's good news. I think it would be very reassuring to me as a regent, but I think it also is just one of those transparency things of, this is what we found, this is the level of detail. So, my encouragement would be, I'm not looking to dominate an agenda. I'm just looking to make sure we give it proper time to have explanations, and while understanding that not everybody's going to go to the detail of reading it. So the important things we can highlight, but give ample time for people to ask questions as well. So with that, I'm looking for a motion that says the Board of Regents Audit Committee recommends that the Board of Regents accept the KPMG Forensic Audit Report issued on October 31, 2024. Do I have a motion?
So moved.
Thank you. Second.
Second.
Thank you. Parliamentarian Young, will you conduct the roll call vote, please?
Chair Cox,
Yes.
Vice Chair Hamilton,
Yes.
Regent Martin,
Yes.
Regent Powers,
Yes.
Regent Strauss, did we lose her? Yes. Regent Stevens,
Yes.
Regent Sutherland,
Yes.
the motion passes.
Thank you very much. And to everyone involved in that process and the report, thank you very much. It was very well done, very well presented, and certainly gives us a great framework for the future. So thanks to everybody involved.
Hey, Chair
Thank
Cox.
you very much for your time.
Yes, sir.
I was on mute when I was responding to you. I think we definitely will have enough time to go over this audit. It's been something we've been anxiously waiting on, and we definitely want to celebrate. You know, the good news is there's no major issues after being fleshed out pretty thoroughly over 3 different types of audits, and then we've got things that there's always things to improve on. So
right.
That's great that we've got some more areas to improve on. But one of the reasons we sent the audit out is for anybody that wants to look at it in great detail. So maybe it will curb some of the major questions before the board. And if anybody sees anything of any questions, they need to contact either Dr. Quarles or Todd or whoever, and ask those questions. Feel free to do that in advance if they feel necessary.
Thank you. Yep.
But I echo Chair Cox's comments. Thanks to everybody that's been involved in doing this. I mean, this was something that we really wanted ourselves to have a thorough review after we found some alarming instances, but we're really glad that the initial alarm was the most we needed to give to it. So appreciate all your all's efforts, and Chair Cox, as always, you did an excellent job. Chairing the most important committee of KCTCS.
That's right. That's right. And Barry, I think it really is important that we establish a culture, and we are establishing a culture where the highest hurdle of all is us internally. That anything external would pale in comparison to how, what rigor we bring to the process of self-evaluation. And to me, that culture is one that we're growing. So I think it's the right direction.
It is. I mean, I think it's time now that we focus on the future. We've got a bright future, and learn from our past instances, and let's move forward. So job well done, y'all.
Absolutely.
Yep.
So let's forge ahead with our external audit. We've got to review the external financial audit and make a recommendation to the board. So I'd like to ask 4 of us and Mazars to walk us through the external audit. Todd, I'm going to let you continue to do that. You're on a roll.
Okay. Ready?
Todd.
Yeah, Jennifer Williams from Forbes is here and prepared to speak. We're sorry that the report was a little late. There was a lot of last minute work done on this, but appreciate all the work that our friends at Forbes Mazars have done for us. So
Yeah.
Jennifer?
Thank you, Todd. I appreciate that. And I appreciate the opportunity to be here with everyone today. I know it's a lot of auditors on this phone call with the committee today. So I appreciate your patience and the opportunity to present today. And happy early Thanksgiving to everybody on this call. So I have prepared just a few high-level comments regarding the external audit for 2024. I also have Kimberly Taylor with me today, who is the senior manager on the account. So she can help answer questions as well that you may have. But again, just high-level comments to go over with you today. So we have the audit results, some financial statement highlights, as well as our required Board of Regents letter to you all, and then any questions that you might have. So as you can imagine, with all of the audits, with the state examination report and the forensic audit, that impacted our external audit timeframe. So we were able to conduct the audit in the normal timeframe, but we were needed to hold the audit to make sure that there wasn't subsequent discovery of facts that occurred during the forensic audit. So again, Dean Dorton does a phenomenal job with the internal audit. KPMG had a great report with that. And so what was really nice, and as everybody mentioned, it was a good report from the forensic audit that did not show fraud and different items from that regard. So again, very positive feedback that KCTCS has received. And so once we were able to see the forensic audit, then we were able to start the process of finalizing the external audit results. So the team there at KCTCS provides us great client assistance and responsiveness to perform the audit procedures. You do have a draft set of financial statements. They are what we call our final draft. There are certain items that we have to have done or completed before we issue your report that are required under the standards. And so we are in the process of wrapping those up this week. So again, we are planning to issue a clean, unmodified opinion on the financial statements. That's what you have received on your external audits in the past and what you would expect to receive. One item you will note is that it is a single year presentation. As we spoke with management in regards to the financial statements, this is accepted under the standards and accepted by the state. Next year, you will be adopting GASB 101, which is compensated absences. And so generally the way GASB has with the pronouncements, you have to show it in the prior year. So sometimes management will decide to show a single year presentation. And so with the interest of time and items, a single year was presented this year, and then the anticipation that it will be single year next year with the adoption of 101. We did not have any significant deficiencies or material weaknesses in internal control that we noted both in the financial statement audit as well as in the uniform guidance audit. There were no new standards that had to be adopted during the year. So that meant that there was no significant changes to your financial statement. So no new footnotes in the report, very similar to the prior year. In regards to the single audit, we did have 3 major programs that we were required to test. We tested the student financial aid audit or cluster, and then the temporary assistance for needy families and the coronavirus state, local, and fiscal recovery funds. This one, that fund is a high-risk program that is dictated by the compliance supplement. So while we had tested that in the prior year, we were required to test that again in the current year. So we had no written findings to report in the financial statement. So you'll see no matters reported in regards to those items. A few financial highlights here. So because the financials are a single year, I added the comparative information here. And so you'll see net tuition decrease about $4 million there in net tuition. That's really driven by the discount. So if you look at the gross tuition as enrollment and rates have increased, that number is higher, but the discount has risen in relation to the gross tuition as well. So that's where you see the decrease there in the net tuition number. Net position remains positive, an increase about $154 million there. And then your endowments and other investments also saw an increase as the investment return has bounced back from in the market. Here is just a snip of your statement of net position. Again, that gives you kind of a summary of the key line items in your financial statements. Again, cash and cash equivalents very comparable to the prior year. Increase in restricted cash, and this is for funds used for capital improvements and various items there at the system. Then, as I noted, your investments did increase. You also have the lease subscription and capital assets. So as you may recall, in the prior 2 years, we had 2 new standards adopted. And so that is where the leases and the subscription assets were included on the financial statements. And then the corresponding payable as well. So really was a gross impact to the financial statements. One item to note in the current year is that the OPEB liability significantly decreased. Many institutions and organizations that are in the OPEB plan did see that even switch from a liability to an asset. And so yours did remain a liability, but down to about 14 million. So that is a significant decrease there where you see the 33 million decline. And that is really driven by the investment return in the plan and then the actuarial assumptions that dictate how that liability is calculated. Next page just gives some high level here of the revenues and expenses. So federal and state grants around 329 million compared to 304. So still seeing some of that coronavirus in the funding from those, which you will start to see that as those go down, as those have been eliminated in the future years there. And then the state appropriations very consistent with the prior year at 195 million. Any questions on the financial statements? I know in the interest of time, as we were running up on that, I wanted to just high level talk about some of the financial statements.
I think you can go right ahead.
Okay, perfect. So then the other item to report to you today is the Board of Regents letter. And so again, we are just required to follow the standards. We are planning to issue an unmodified opinion on the system's financial statements. All the significant accounting policies at the system are noted in note 1 of the financial statements. And then there are management's judgments and accounting estimates that are inherent in the financial statements. And so here is a list of those items that we just pay particular attention to during the audit process. And we did not have any issues or concerns with these estimates, but we look for at your allowance for uncollectible receivables, the valuation of your investment securities, as well as the assumptions that are involved in the pension plan and the OPEB plans. We did not have any audit adjustments that we proposed to management. So as management has been presenting the internal financial statements, there were no adjustments that were proposed and recorded for the financial statements. We did note one uncorrected misstatement. So there was an item related to depreciation expense with a finance purchase. So there was a correction in how that was presented in the financial statements. It was about 3 million. So overall, it was deemed not significantly material to the current year financial statements. It will be corrected next year in the presentation. So again, not deemed a significant item. And so that was what we passed on those and recording that in the financial statements. As you can imagine, the significant issues discussed with management during our external audit was the status of the state examination report and the forensic audit. So management kept us up to date in the timing of that process. And then we did have one internal control over compliance that was only a deficiency, and that was in regards to the COD reporting. So in the student financial aid testing, what we noted is there was a timing where the funding was sent out to the students incorrectly, and so it was recouped back the very next day. It was a system item with the funds. And so the date within the other system, it's the COD, the Common Origination Disbursement System, it reflected that original date. It is very hard to go in and change that date. And so, again, it was a matter of no students were awarded funds and that they were not allowed to receive. It was a timing of how that date was inputted or went into the system based on how that disbursement occurred. So again, that was why it was just noted as a deficiency, and it was not a compliance error that was noted to put into the report. Any questions on those items?
Anyone?
I also just want to comment that I really appreciate all the hard work that Todd and Buddy and the team there. I know you had a lot of auditors asking you a lot of questions, and they were always very responsive. And that is a hard thing to do when you have your day job as well. So I just really wanted to comment on that and just how responsive the team was to us and the additional questions that had to come with when you have a forensic audit going as well. So just really appreciate that.
I would echo that. I think the level of cooperation, patience, and endurance, if you will, for a whole lot of activity over the recent past reflects very well on staff and their commitment to doing the right things every day. So I certainly appreciate that. I personally always viewed it great when there are no adjustments. I know that my financial folks say that's not always the case, that sometimes that happens, but I'm old school. So I like the fact that we don't have any of those in this report. Any questions for anyone from anyone before we have the motion to accept this? So with that, KCTCS Audit Committee of the Board of Regents obviously recommends that we accept the Forvis Mazars audited financial statements. They have a motion?
Motion.
Thank you, sir. Second?
Second.
Thank you. Parliamentarian Young, if you'll conduct the roll call, please.
Chair Cox,
Yes.
Vice Chair Hamilton,
Yes.
Regent Powers, Regent Powers,
Sorry, yes.
thank you. Regent Shouse,
Yes.
Regent Stevens,
Yes.
and Regent Sutherland.
Yes.
The motion passes.
Thank you very much. So is there any new business that the committee needs to address?
Mr. Chair, just an announcement, if you don't mind. The Fire Commission audit, state audit is ongoing. We believe it will be completed sometime maybe early summer. The completion date keeps getting pushed back. There's also an LRC audit as well that's ongoing. Both of these are, again, looking at financials, processes, controls, and administrative issues at the Kentucky Fire Commission. They've been fantastic to work with, and they welcome the results. Just one other item here is that we've had a lot of information today. Auditors are our friends. We appreciate that. It gives us an opportunity to always learn, improve, but I think more importantly, move on as well. We've been through a lot. The system's been through a lot, and I'll talk about it more at our Board of Regents meeting, but this is something to celebrate, make improvements and move on. And finally, that we have a general counsel starting next month as well. It's going to aid us with this. We have a full-time person focusing just on policy review as well. And so I'm very excited about this. So that's all I have.
Thank you, President Quarles. And anybody else have any new business? I think before we adjourn, it's always important this time of year that we recognize the real work's done by that faculty and staff that are there with students, and our thankfulness, our gratefulness, our appreciation of the great work that happens there. We're all fortunate upstream to be a small part of the support that helps that happen. So to all the faculty, all the staff, everybody who's got a hand in this, we thank you. We appreciate what you do. We wish you a happy Thanksgiving. Take a breath. We've got another year ahead of us coming up. So with that, is there a motion to adjourn?
So moved.
Is there a second?
I'll second.
Great. And Parliamentarian Young, I think we can just show of hands on this one, correct?
Any
Happy
objection
Thanksgiving,
to
everybody.
adjourning?
Happy Thanksgiving,
Thank you.
everybody. We'll see you soon.
Happy Thanksgiving. Thank you.
Thank you. Great job. Thank you.